I want to start exactly there. And with regard to the shutdown, where we are, longest shutdown on record, but also the lack of data. The picture that we're kind of piecing together from various disparate parts show that a labor market is weakening. In your view, how weak is it?
You know, I tend to concern myself more with the direction as opposed to the magnitude, to be honest.
Okay.
But I think we're probably at the Fed's estimate for the unemployment rate for year end already. So a couple of months ahead of schedule. So that's not necessarily a good thing. So my sense is that the speed of the weakness has, maybe picked up a little bit. But I think we're probably at 4.5% already on the unemployment rate.
Okay.
If it were to come out. And, I think, what people need to kind of answer is, why do you think that stops and what gets it to stop? Because I think when you look at it bottoms up, like if you kind of go industry by industry, it's really hard to see where the growth in employment is coming from at the moment.
Well, and on that, I'm thinking about, Neil, great to be talking with you again, the dual mandate, right? And so I'm just wondering if we continue to see weakness, in the labor market. And then we just talked about Treasury Secretary Scott Bessent kind of deflecting when it came to inflation, as he's out and about talking about the administration's policies. I mean, we've heard from Fed Chair Jay Powell about the struggles on both of those mandates. Do you think it's going to be a bit of a squeeze for the Fed, for the U.S. economy, for all of us, in terms of weaker labor market staying that way and inflationary pressures kind of staying that way?
Well, my own view of it is that I don't view the trade-offs as nearly as onerous as the Fed does. I mean, I think there's more downside risk to the labor market than there is upside risk to inflation. At the end of the day, inflation is 3% this year. It was 3% last year. The difference between this year and last year is tariffs. So that would tell me what? That underlying inflation is probably slowing. And, the fact that it's really hard to make a case for why tariffs are anything more than a one-off lends support to the idea that the Fed should continue to cut interest rates here. In terms of, and remember, to me, the big story is that employment tends to evolve potentially in nonlinear ways. It kind of, once like a increase in the unemployment rate really gets going, it tends to keep on going. And that's why you have this sort of, it's episodic, right? I mean, you see big spikes in the unemployment rate at times, right?
Yeah.
That's not really the case with inflation. And so in other words, inflation tends to move in a more linear way and, particularly outside of commodities. And unemployment, that's not necessarily the case. It tends to be more nonlinear in fashion. And I think that's what, frankly, the Fed and, the markets might be missing is the sort of downside kind of growth tail risks associated with the labor markets.
What if the Supreme Court comes back and says the tariffs are not legal as they're implemented? Does that change your view?
No. I mean, I think if you think that the Supreme Court is going to be the institution in Washington, D.C. with the last word on tariffs, I think I'd like to have some of what you're smoking.
Well, is that because you think there are other avenues for the Trump administration to enact these
the
tariffs
fact
apart
is
from
that,
IEEPA?
Absolutely. The Congress, this is really about Congress, and Congress is frankly a lazy bunch. Okay, and they've delegated a lot of their tariff authority to the White House. And there's a vast legal architecture from which the president can draw from to prosecute a trade war. And, I think immediately he could probably do a temporary 15% baseline tariff, and he can do that for 6 months. And that will, sort of act as a bridge to get towards national security tariffs. So I don't think we're out of the woods on tariffs because the SCOTUS rules it one way or the other. I mean, I think that's sort of wishful thinking, in my opinion.
Hey, a couple of stories I just want to bring in. One was from last week, Neil, and it was about U.S. consumer sentiment tumbling to near the lowest on record, and part of it was the government shutdown weighing on the economic outlook, but also high prices, souring views about personal finances. There were also concerns about the labor market continuing to weaken in the future. We got that from that report. And then we just had a story that our Alexis Christoforous mentioned about Walgreens no longer giving many of its retail workers paid vacation time for Thanksgiving, Christmas, and other major holidays. The company looking to cut costs under new owners. Like, I just keep thinking about this K-shaped economy, and there's just so many people, and I think about the SNAP benefits. How many people are on food stamps and getting assistance? Like, this economy doesn't feel great, and yet we have records on Wall Street, and we have earnings that seem to be okay, and the AI spend is out there still in a big way, even if there's been some questions over the last week or so. So I don't know, from an economic perspective, are we in a good economy or no?
I mean, I think we're in a deeply imbalanced economy, Carol.
Okay.
I mean, and it's been that way for a while.
Yeah.
I recently wrote a piece for your colleague Joe Weisenthal on Odd Lots. Just sort of characterizing the economy as really three different things, right? You have the housing market, which I think is in recession, and you have the consumer, which is kind of, let's say, in the middle. And then you have AI, which is, booming. And when I go to client meetings and I give my sort of outlook on the economy, the pushback that I get is kind of what you were describing, right? It's, AI, it's stocks, it's, the high-end consumer. And people talk about that, frankly, as if those are three separate things, but they're really derivatives of the same thing. And I think that's something to keep in mind here. The other thing I would say is that, we talk a lot about the resilient consumer. We hear a lot about, never bet against the U.S. consumer. The truth is the consumer never actually gives you a signal ahead of an economic slump, right? If you go back historically, consumer spending has never, ever declined in the quarters leading up to a broader economic downturn.
Interesting.
Sometimes in an economic downturn, consumer spending actually expands. Right? Like, go back to 2001, right? Like, so that's not unusual either. So if you're waiting on the consumer to give you a tell, you've probably waited too long, right? I mean, consumption has a way of amplifying downturns. But I would just say, what's been interesting to me is just how, like, the labor markets have evolved the way you've expected, right? It's come for the young first, and I think it's going to come for the affluent next.